Welcome to the deep dive. It's funny how sometimes you get truly phenomenal news from a company,
Yeah,
and the market just reacts in this completely counterintuitive way.
absolutely. That's exactly the picture with Palantir, PLTR, after their Q2 earnings for 2025.
Right. So that's what we're going to unpack today.
Exactly.
Yeah.
Palantir put up what their CEO, Alex Karp, basically called astonishing impact of AI leverage. Just
Yeah.
smashed expectations.
Landmark quarter, they call it.
Landmark.
Yeah.
Phenomenal, yeah. But then the market. Skepticism, volatility. So our goal here is to dig into that conflict, look at the company's speed, their operational velocity.
Against the valuation worries, give you a clearer framework.
Precisely.
Okay, let's start with the good stuff, because fundamentally this was a rocket ship quarter.
Oh, absolutely. The numbers were, frankly, stunning.
First time ever over $1 billion in quarterly revenue, right? $1.004 billion.
Yeah, that's a 48% jump year over year. The consensus was way lower, like $938, $939 million. They crushed that.
And adjusted EPS came in at 16 cents, also beating the $1.14 people expected.
And crucially, it's accelerating growth. 48% this quarter versus, 39% in Q1.
Yeah, that acceleration is key.
Definitely. And a huge driver was their U.S. commercial business.
Right, that segment was explosive.
Explosive is the word. It surged 93% year over year, hit $306 million.
Wow.
It just confirms that their artificial intelligence platform, AIP, is really resonating. Customers are buying in.
And they added a fair few customers there, too.
They did.
Yeah.
U.S. commercial customers grew 64% year over year. They're up to 485 now. So you see that AI strategy translating into real business.
Okay, so top line's accelerating, customer growth is strong. What about profitability?
Also incredibly strong. They talked
Yeah.
about this rule of 94 score.
Rule of 94, explain that.
So you take the revenue growth, 48%,
Okay.
and you add the adjusted operating margin, which was 36%. That gets you 94. Management's term was that it obliterated the standard tech benchmark, often called the rule of 40.
Obliterated.
Yeah.
Okay, so huge operating leverage. They can grow super fast and be really profitable.
Exactly. Which, like you said at the start, makes the market reaction even more puzzling.
Yeah.
Firing on all cylinders, operationally speaking.
Mm-hmm. And they seem confident about the future, too. Bookings look strong.
Very strong. Record total contract value booked TCV, $2.27 billion. That's up 140% from last year.
And the U.S. commercial part of that?
Even more dramatic. $843 million in U.S. commercial TCV, up 222%. It really signals that this growth isn't a fluke. There's a strong pipeline.
So AIP is really the core here, making generative AI, these LLMs, actually work for businesses.
That's the pitch, yeah. It acts as the ontology layer. Basically, it helps the AI understand the context of a company's specific data and operations. Makes the AI useful, not just clever.
Right, gives it structure. I saw that in Nebraska medicine example. They coined Palantir unit of time.
Yeah, pretty compelling stuff. Getting value in under an hour. They cited a 2,100% increase in discharge lounge use. Real-world impact.
Okay, and financially stable, too. Good cash position.
Rock solid. $6 billion in cash, zero debt, a fortress balance sheet.
And they raised their full-year guidance pretty significantly.
They did. Bumped it up to around $4.15 billion for the full year 2025. Shows internal confidence.
Okay, so phenomenal quarter, accelerating growth, killer profitability, strong bookings, confident management.
Checks all the boxes operationally.
So why this overreaction from the market? What happened there?
Well, it was a classic sell the news situation, it seems. Initially, after hours, the stock popped maybe 4 or 5%.
Okay, expected.
But then pretty quickly it reversed. Over the next few sessions, it pulled back sharply, I think over 17% at one point.
Ouch. So even smashing expectations wasn't enough.
Apparently not. And this brings us right to the elephant in the room.
High
Valuation.
the bear case.
Exactly. The main argument against PLTR is just how expensive the stock is. People throw around the word egregious.
What kind of multiples are we talking?
Well, depending on the exact metric and timing, north of 100, maybe 115 times annual sales and forward earnings multiples, over 240 times.
Okay. For context, the broader market, S&P 500, is maybe 25 times earnings.
Something like that, yeah. So Palantir's in a different stratosphere. Morningstar was blunt, called the valuation a major headwind, basically said, stay away for now.
So the thinking is the current price already assumes years and years of perfect results, no room for error.
That's the crux of it. The market seems to have priced in flawless execution far into the future. Any slight misstep could be punished severely.
And this leads to disagreement among analysts.
Oh, a huge divide. The overall consensus rating is hold, but that hides some really wide gaps in opinion.
Like who?
You've got bulls like Wedbush. They're saying outperform, target price $200. They clearly believe in the long-term AI dominance story.
Paying up for future potential.
Right. But then you have the bears, like Morningstar with a $115 target, Goldman Sachs saying sell with a $141 target. They're looking more at traditional metrics, current earnings, and saying this valuation just doesn't compute right now.
It's a clash of investment philosophies, really. How much do you pay for potential disruption versus current fundamentals?
Perfectly put.
So, wrapping this up for you, the listener, it's complicated, right? You've got this elite company operating at an incredible pace,
Peak performance, really.
but a stock price that seems to demand perfection for years to come. It creates a real dilemma.
It really does. And the decision, your decision, isn't simple. It comes down to your personal factors.
Like your time horizon. How long are you willing to wait?
Exactly. Your tolerance for risk, for this kind of valuation volatility, and ultimately, your conviction. Do you believe in Palantir's long-term story?
Yeah. It forces you to ask that fundamental question.
It does. Is Palantir truly a generational company, one that's going to dominate its market, making today's price look cheap in hindsight? Or is it perched on a valuation cliff?
Where even hitting all their marks might not be enough if the market decides to compress that huge multiple.
Precisely. That's the key tension, something to really mull over as you watch Palantir and the AI space evolve.